I'm here with Todd Rosenbluth, Director of ETF Research for S&P Capital IQ. Todd just completed an ETF Analyst Hour on emerging and frontier market investing and has stopped by to answer questions for us. Todd, tell us about the interest in emerging market ETFs. And has anything changed from 2012?
Yeah, we saw very strong inflows in 2012. It's tapered off a little bit in 2013. We actually saw some outflows in March of 2013. There's been a bit of a distinction this year between country-specific ETFs and the more diversified ones. The more diversified ones we talked about primarily on the webinar is where investor attention still remains. So it's still a part of people's portfolios, just it's getting less attention perhaps than it did in 2012.
You noted that Vanguard has shifted benchmarks for its emerging market portfolios. Why is this important?
Well, so Vanguard's making a shift. They're going from the MSCI benchmark to a FTSE benchmark, but they're actually transitioning. So it's not happening overnight. It's gradually happening. So what we've seen is that the exposure the ETF had to South Korea has come down from where it was at the end of the year, but is still going to actually go down further as South Korea is not an emerging market in the eyes of Vanguard's ETF portfolio. So there's going to be different exposure from this portfolio, the Vanguard one, towards the iShares one, and it's important to know the differences on a country, on a sector, and an individual stock basis, and that's something that we talked about on the webinar.
We've seen ETFs launched in the past year that look at emerging markets differently. What are some examples?
Yeah, so the Vanguard and the iShares products have been the dominant ones in the emerging market space, but PowerShares recently launched an ETF, as well as iShares launched an ETF focusing on volatility and trying to reduce the volatility of the portfolio. Now, of course, emerging markets are more volatile typically than the more developed US and Europe markets. So this is an effort to try to find the least risky stocks within a riskier asset class to try to reduce the portfolio exposure to that level of risk. And we'll see, they've gotten some investor attention so far, but we'll see when we get 3-year track records in terms of the 3-year volatility. Is it really lower volatility at the ETF level than a more traditional portfolio?
Okay. Where does the emerging market space go from here?
So what we've seen is that money is moving into, and attention is going into frontier markets. So these are countries that are less well developed than the emerging markets, which of course are less developed than the developed markets. And what we've seen is some of the newer ETFs to launch are focused on single country specific ways of doing that. So Vietnam is one specific market that has an ETF that's got a little bit more of a history behind it. But we've seen an ETF launch just this month focused on Nigeria, which is a market that perhaps is not on investors' radar screen, but maybe will be. So that's the next level of investor attention, or at least the opportunities for them, these new frontier markets. And we'll see if investors gravitate towards these or they want a more developed emerging market portfolio like what iShares or Vanguard has to offer.
Thank you, Todd. If you missed the webinar S&P Capital IQ did on using ETFs for emerging and frontier market growth from April 17th, please contact us to listen to a replay. Contact us at wealth@spcapitaliq.com. Thank you.